when there's fear on the market, they stop investing in startups. I think it's actually where you could make some amazing deals. YC is this very sort of protected ecosystem and bubble where it is the best startups in Silicon Valley. If you go to the Four Seasons in beautiful tropical islands during COVID, well, everyone was home, but in Simbart, everything is going on as always, because it's the elite, it's the top. I think we're at peak illiquidity, we're at the slowest it's ever been. AI is accelerating everything. Welcome back to the Lobster Talks for another amazing episode with Laurie, dissecting what's going on in tech this month. Let's get started. Laurie, thank you so much for being here again.
Great. Yeah, it's good to be back. So it'd be a great place to start just with how things are going kind of at the macro level. In quarter one, we've seen a record amount of funding, but also there's a lot of like bearish outlooks still at the moment for 2025. I guess like now as we head into the next YC batch, which is ongoing at the moment, like how does the outlook, the macro things that are going on, like do they ever affect your investment thesis, or is investing with such a long time horizon kind of actually silences the noise of what's kind of happening on a macro level?
Yes, it kind of does. We're tapping in the middle of a big sort of uncertainty, mostly coming from Trump's tariffs. Early 25 with Trump, we're very hopeful for more M&A, opening of the IPO market. And then now there's been a lot of uncertainty in the market. I think early April, we had some pretty bad days. Like I think it was top 10 or top 11 worst day sell-off on the NASDAQ and S&P. So it has been turbulent, we could say. But what happens is with, first of all, the stock market and the startup world is not really the same. Also, many investors play with the market. So when there's fear on the market, they stop investing in startups. We saw that in 2008, 9, and 10. We saw that with COVID. And we saw that in early 23. I never stopped investing. So 2008, 9, and 10, I was not investing yet. But in COVID 2020, I didn't stop investing at all. I think it's actually where you could make some amazing deals. Same thing with early 23. Valuations were down, but you could still invest and have great deals. One of the reasons you mentioned is it is a very long-term play. You're investing for 5 to 10 years. So the conditions of right now don't really matter at the time of exit. Also, when there's less people investing and more fear, uncertainty, you tend to have better prices, lower prices. So it does not affect my way of investing, including in the next YC batch. We'll have to see. First of all, is it still very uncertain in June when the next demo day is happening? Maybe all of this tariff thing is already behind us. We'll see. I don't know right now. But also, YC, I think, is this very sort of protected ecosystem and bubble where it is the best startups in Silicon Valley, which Silicon Valley itself is some of the best startups in the world. And so YC is a very sort of protected, privileged ecosystem. I often compare to if you go to the Four Seasons in New York or in the beautiful tropical islands during COVID, well, everyone was home, but if you go to the Four Seasons in Simbart, everything is going on as always, because it's the elite, it's the top. And so same thing with YC, it's the elite, it's the top. And so they're still going well, they're still fundraising. In 2020, YC companies were raising really well. In 2023, where fundraising went down, YC companies were raising really well. So I'm not sure if I was a spring 25 YC batch company that I would be afraid. I will personally be investing as usual. And just last thing is some LPs, some investors in some funds are, more scared or more wary right now. I want to say that it's a mistake. Of course, being a fund manager, I would always say that, but it's probably the same thing. Like if you're investing in a fund, it's for a 5 to 10 year time horizon. And so it doesn't really matter what's happening now, I think. We do see it. We do see a little bit of slowing down just in the last few weeks of LP investing, but I think it's going to pick back up. I think it's going to be resolved pretty soon. What the market and people really don't like is uncertainty. So we don't really know what's going to happen. But as soon as it actually settles down, wherever it lands, it's gonna pick back up.
Mm-hmm. Yeah, and then you touched on like if the public market's coming down, like what all VC investors are hoping for is like increased pickup in M&A and activity. Obviously, this quarter we had the Wiz deal, which is like the largest of all time. Should it go through? Of course, I think it's 2026. It's planned to go through. Like I feel like the M&A news and have been very rapid over the last kind of quarter, more so than last year, definitely. And two YC companies were part of that. So one was Starjar, which is 2024 company, and Rehook, which is 2022. And even actually this morning, a London company, which was founded in 2021, which is Runner, got acquired by Strava. It's not a YC company, but it's showing that actually there are these turnaround to acquisitions that are quite quick. And the other activity that's happened today is with OpenAI reportedly going to acquire Windsurf, which was founded in 2022, I think. Those are really short timelines to acquisitions. And so obviously with investing in YC startups where they're very early stage, like, are you thinking about their kind of exit nature in the kind of the short term, or are you looking for founders who are quite explicit about wanting to all the way to build these kind of mega companies that are not going to be getting acquired?
So, a couple things. One, I think we both called it here on this show a few months ago. I said, I think we're at peak illiquidity. We're at the slowest it's ever been, right? It went from 8 years average to 10 to 12. And I called it, I said, I think it's going to go down. And there's many reasons for that. The main one being nobody wants that, right? It's not good for anyone to stay illiquid for so many years. So that's one thing. The second thing is, AI is accelerating everything. So AI is accelerating building a startup, but it's also accelerating go to market, finding customers, actually selling to them through AI emails and dedicated sales teams, and actually AI SDRs and BDRs that can actually even call you, etc. So AI is moving everything faster. So that's another reason. And then the third thing was the political climate, where illiquidity was also because people were scared of M&A under the previous administration, and now it's really being unlocked. So all of those things that you mentioned, all of the three confirmed exit, plus it looks like OpenAI is making a big acquisition from 2022, tend to confirm that. And that's great. That's great news. I think those are the first signals. And by the way, when I said we're at peak, liquidity is going to go down, I think the average is going to go way down, right? It went from 8 to 10 to 12. I think it could go below 8. I think it could go to 6 on average, which includes 2-3-year-old startups being acquired, like the ones we just talked about. That's one thing. The other thing, I want to answer your other question of which sort of types of founders am I looking for? Very early on, when I was starting to invest with my group of angels, way before I had a fund, I would notice that a lot of people were asking the founders, what's your strategy? Do you want to IPO? Do you want to sell? And I realized pretty quickly that this was not really a good question to ask. Actually, most founders were almost offended by the question, because man makes plan and then God laughs, right? You don't know what's going to happen 5 years or even 2-3 years from today. You don't know what the world will look like, especially the world of AI. I've really now focused and narrowed it down to founders who really want to create value, right? You want to build the best business possible. You want to grow it as fast as possible. You want to make something people want. You want to just create a valuable business that's making money, and then the exit will take care of itself. I don't think Windsurf anticipating being acquired that quickly, but they just created so much value so quickly thanks to AI that some people are interested. So it's like everyone says, if you go in business with the only goal of making money, you're not going to succeed. You should go in business to try to solve the problem, to try to make the world a better place or something like this. It's pretty much the same thing here. If you're starting a startup just for the exit, that's not the right way to do it. So I don't ask that question. I tend to stay away from that. I want them to create as much value as they can. And the exit, I almost don't care about it. Of course, I have to care. It's my job. I'm a VC. But I'm trusting the universe. I'm thinking if this startup is super good and creates a lot of value, then the exit will take care of itself, quote unquote.
Mm-hmm. Yeah, it's a good message to not be speaking to founders about their sort of exit plans. Just on that, I think there's a little bit more there around. I was reading this thing this morning about by a YC company called Largo, who were talking about how they had pivoted in YC. And so I was just wondering about how, and they were talking about trying to build this startup that really solved their own problem. But they were saying that isn't necessarily like the best strategy, because they ended up pivoting into a startup that wasn't solving their own problem. So when you're talking to founders, like a classic thing that people say is, are they really the right founder to be solving this? So for example, like if you're looking at startups that are solving a problem for the restaurant industry, like has the founder worked in a restaurant? I'll be interested to hear your thoughts on that. Like when you're screening founders, or if you think about founders in maybe the last batch that Lobster funded, is there a common thread there between like this, the founder is their own ICP, or is that kind of not necessarily something that you're overly indexing on?
Yes, it is something that I look at because it is important. Being a founder is very difficult. You're going to most likely fail. The odds are against you. And so you have to have a passion, you have to have a link to what you're building. And so very often starting with trying to solve your own problem is great because you have an emotional connection to it. It is a problem that you have, and you're thinking, if I have that problem, probably other people do too. And what happens is, I think you want to talk about pivot as well today, so we can get into that. But the link is you usually start with your own problem, and then you might pivot into something adjacent that's not your own problem necessarily, but it could still be the same space and the field that you know something about. I actually never really thought about it, but in the last batch, I funded 5. In the previous podcast, we said 4, but then I did a 5th one after. And I'm just thinking right now, there's at least 3 of them that have a very personal connection. One has been a designer for more than 10 years, and he's going into building Cursor for designers and going into that space. Another one is going into the insurance space and comes from a family of insurance brokers from both his parents, I think, and his grandparents. And then another one is using AI to replace intake at hospitals done by nurses. And he had a very personal story with hospitals and nurses and a rare disease with his family. And he's lived through this for the last 9 years, I believe, of going to the hospital almost every week and doing the same intake form again and again and realizing how pointless and meaningless it was. So at least 3 that just jumped to my head right now have deep, meaningful connection. I don't think it's mandatory. I think you could potentially succeed without, but like I said, it's going to be a long journey. It's going to be hard. It's better if you have a connection. If you don't have any connection, it's fine if you don't have any at the beginning, but you should be able to build one very quickly. Tony Xu, the founder of DoorDash, said he still to this day personally makes delivery to families on DoorDash just to see who are his customers and what's the experience like, et cetera, et cetera. And that's amazing. YC keeps telling you, talk to your customers every week. Brian Chesky from Airbnb still sometimes responds to support emails from Airbnb. Like literally, you could say, hey, I have a broken glass, and it could be an answer from Brian Chesky. And so that's the thing. Like maybe you're not an expert at the beginning. I don't think Brian Chesky was a sleeping at other people's house expert at the beginning, but you become one. That's what I want to see. And you can become one very quickly. In the first 3 months of YC, you've got to live and breathe this thing. So yes, you have to be close, very close to the problem.
And this might be like a controversial one. I think like people ask this often of YC now, as YC increasingly becomes this almost like status symbol, especially for people from somewhere like Stanford or within like an elite engineering background. Like YC is this huge stamp of approval. You actually start to see founders repeat applications, like say 5, 6, 7 applications to try and get in, and they're pivoting their idea all the time, and they're trying to build this almost idea that YC will fund so they can get into YC. And like I won't mention their name, but looking at a post on Hacker News where this guy's saying that they changed the idea 5 times, they've done 5 different applications, and eventually they got in. And it kind of seems like that threads on here. Like you talk about founders in the Lobster portfolio who have really experienced like a deep pain for the problem that they're solving, and so they have solved it, and along the way through that have got into YC. But maybe there is also this class of founder who is just trying to get into YC. Is that something that you see when you talk to founders, or is that something you're actually trying to weed out, or is it actually not relevant?
That's fascinating, this topic. I love it. By the way, like I've started 7 startups in my life, and all of the first ones, I was not passionate about the topic at all, and they failed miserably. My second startup was a wine business, and I don't know anything about wine. I mean, I'm French, so I know a little, but I tried to become educated and some sort of an expert into wine. But when I started, I really literally knew nothing. And I was not passionate about it, to the point that now I don't even drink alcohol anymore. I've been sober for years now. So it's never been something that I was really interested in. So I think it really does help to have a passion. Now, on the YC thing, I think it's a good thing mostly that people reapply and change their ideas. If you were rejected the first time, it means your idea was not good enough. So it's probably better to reapply with something else than apply with the same idea. And people at YC, the people, the partners, the group partners who judge the applications and select the startups, they're not, random people. They're experts and they have all the credibility you want to be here. We can talk about Tom Blumfield, who actually built not one, but two unicorns in a matter of like less than 10 years. You can trust him. He knows what he's talking about. So if they rejected you and they have a pretty strong process on how to accept or reject, you can probably trust their judgment. I mean, you could be rejected from YC and still make it big, but I think the odds are not in your favor. So tweaking to try to get into YC is a good thing because it brings you closer to actually making something people want and actually making a real business. So I'm not against that at all. I don't think it's a bad thing. It's a bad thing if you just do it for the fame and for your resume, and then you end up going to YC and you don't do anything and you just put YC on your resume and move on. That's terrible. But once you're into YC, usually the incentive is to actually go out and build that thing because it has the potential to be very big. So I think the incentives are aligned. And again, because I personally have so much faith into the YC partners, I think they are really credible to be judging an application. It's like pivoting to find product market fit. You're pivoting your idea to find ideal YC fit. But it's, in my opinion, it's a good thing. And you shouldn't be ashamed of pivoting 5 times until YC picks you. YC has pretty good taste. They're not always right, but they're often right. And we've also commented on this podcast several times, their request for startups. So the way they look at the future. And again, they have a pretty strong view of the future and what's coming, in my opinion. So you can mostly trust them. And YC really encourages you to reapply again and again. I know countless founders who didn't make it at the first time, but the second, third, fourth, or even fifth application. It is not looked bad upon. It's actually encouraged by YC.
Yeah, okay, makes sense. Then there is obviously like YC is obviously incredibly supporting of pivots within the accelerator itself. Like Brex got into YC as a VR startup, for example, and is then now a finance platform. I think Goat, the sneaker or fashion company, started something in food as well. So that's because like within the 3 months of YC, they're like obviously pressing very hard. Is this really the product to build? And kind of working with the founders on finding those solutions. But what about pivots like after YC? Like I think I know someone who went through YC with a sports related startup and is now doing something completely different, but obviously came through YC and got that original idea funded as well. How do you think about that with founders? Lobster might be a little bit early on having like pivot conversations with portfolio companies, but how do you generally think about like that pivot conversation, and what signals make you support dramatic pivots or encourage someone to actually just push through maybe a period of time there?
Absolutely. That's also a fascinating topic. I see a lot of companies that went through YC between 2018 to 2022, and they're not AI companies, but they didn't get a lot of traction. And so now they're pivoting into AI and thinking, this is where I'm going to make it. Hopefully at Lobster Capital, we don't have to have that many conversations because we're really investing in the top 2% of startups, including top 2% in terms of early traction and revenue. And so hopefully if you're making several hundreds of thousands of dollars or even millions of dollars at demo day, which is the types of companies that we fund, it means you already have product market fit. And so you're not going to need to pivot. And very few of our companies do need to pivot. Now, what does happen is the company has traction, you fund it, and then for some reason it stops, it flatlines. Either the traction was artificial, we usually see that, and so we don't invest in that, but it could happen that we haven't seen it, or it could be another reason. The traction, the thing they use for customer acquisition just stopped working. There's 1,000 reasons, and that happened to us as well. It's interesting, like you said, what YC does, it sort of presses you to go to find your answers pretty quickly. And if that, after 1 or 2 months you don't have customers, most likely the advice from good partner is going to be you have to pivot. And it's very difficult to keep the same intensity and pressure outside of YC, but probably you should. So probably if you don't have any more new customers after 2 to 3 months, you should already be thinking about pivoting. The idea for a founder is I've raised such amount of money. I have this burn and I have this runway. And so I have this amount of time to figure it out. And either you let yourself run out of money and die and go work at Facebook, or if you want to be an entrepreneur, if you're not growing, you know you have X months left to pivot and find traction. And so if they know, if they're sure they're not growing fast enough, and they still have runway, right? Because if you have, or actually, I've seen it before in one of my old investments, someone doing a pivot with 1 or 2 months of runway. That exists as well, but hopefully you pivot before that. But then I almost always pushing them, at least very supportive of a pivot, because it's the only way that they're going to make it. If they don't pivot, again, they're going to run out of money and just die. What's interesting is, and what YC really pushes you to do, is how to pivot. Usually you don't pivot randomly. Usually your first try, you still had some traction and you've learned a lot of stuff along the way. And it's very common that you uncover something in your first idea before you pivot. So it's not working out for some reason, but you've uncovered something. So a good example, I think, is Discord. I think it was a video game at the beginning and it was not working, didn't have a lot of traction. But what was working was the chat. The chat in the games, people were going crazy. And so they thought, what if we just build the chats? And it was especially for games at the beginning, and now Discord is the behemoth that is for everything. So pivoting is the only way to get yourself out of the hole. Hopefully you figured out stuff along the way to give you an idea to pivot. And I'm almost always supportive, because if you don't, it's only going to get worse. It's difficult for founders to do it though, because you had something and you're starting from scratch. You thought you had it, but you don't. You're disappointed. You believed in your idea. You got to mourn your idea. You got to have the energy to start again. Most companies fail not because they actually abandon. So if you don't have the energy, if you don't want to do it and go through it, because a pivot, it's difficult, right? You got to pick yourself up and you got to start from scratch, literally. I'm always asking them, like, do you have the energy? Do you feel like the first day? Do you really want to do it? If they don't, it's a bad sign. That's usually when they give up or something. But if you have the energy, some people tell me, oh, I've never been as excited than today. That's a great sign of a pivot that's probably going to work.
Mm-hmm. Yeah, the Discord example is a good one, and Slack is the same. It's quite funny that the two most prominent chat apps both came out of failed video game projects. Just coincidence. So I think, like, I get that around the pivot. I think something that you're seeing a little bit more now is with almost like a narrative rebrand. So you see there were startups, say, 3 years ago that were working loosely in AI, and now they're doubling down on agentic AI or something like that. I think even like make.com has been pushing a lot of agentic narrative now, after having been like kind of automations, no code, and now they're kind of reframing stuff in this AI agent way. I think we'll probably keep seeing that over the next few years as like AI settles into its sort of daily habits with people. But I guess with you investing obviously early and at seed and very young, typically in YC companies' lives, like with AI technology developing so much, how do you evaluate those kind of AI investments when actually in 12 months' time or whatever, that function or that kind of even use case habit might be obsolete? Is it looking at the technical moat, or is it backing exceptional founders regardless of their specific kind of AI implementation?
There's a lot of things to unpack here. Again, it's an amazing topic, so thank you for bringing it up. First of all, I think it's not a bad thing. Like we could look at it and be like, oh, okay, they're just following the trend. Just following the trend could actually be super smart. Think about it's 1998 and you're a young startup, you just raised money, and then the internet comes. Call it 1999, 2000, we start getting fast broadband internet. Would you rather stay in your old startup, or would you say to everyone, look, we're a bunch of young dudes, we're talented, we're ambitious, we have a bunch of money, let's pivot into this internet thing and make something much, much bigger? And so that's the same thing here. Should we just keep our old idea, or should we bring it into the AI world and make something bigger that grows faster, more ambitious, even if it's completely different? So I don't think we should judge that poorly or badly. It could be very smart to do that. That's one thing. The second thing is, I want to start by saying, yes, the best thing is to back exceptional founders, right? They're the ones that's always going to figure it out. Whatever changes, whatever happens, if they're exceptional, relentless, have grit and perseverance and know their field, they're going to figure something out. And that's the type of founders that you want. Being an entrepreneur is having 1,000 new problems every day. You need people who figure stuff out and problem solvers who just are able to go with the flow and go with the music. But to answer the other part of the question, it's a question my LPs ask me a lot, is AI is changing so much. How do you invest in AI? I'm being rather careful with some startups where it is really obvious that they're useful now, but AI is changing so quickly, I'm not sure it's going to be relevant 1, 2, 3 years down the road. I give you maybe an example is something that's very specific, a dev tool specifically for some version of AI models of today, or maybe an eval tool because this model has this flaw, but 2 years from now, it's pretty sure that evals are going to be integrated into the models, or the models are not going to have this flaw, or we're going to be able to randomize or anonymize data for sensitive data to a company. It's going to be already native into the model, into the company, into the agent. And so where does that company fit in? If it's just a small sort of add-on that's going to be integrated by OpenAI, Anthropic, and all the others, that's just one example. But so I tend to stay away from those where, in my mind at least, it's pretty obvious that maybe the founders are great and they're going to pivot anyway, but this specific use case almost for sure is going to disappear. I try to stay away from that. And then YC has been talking about this a lot as well, Gary Tan and others, especially with vibe coding. The moat is really not what we thought it was. It reminds me of those YouTube videos, even 10 years back, of someone saying, I'm building a Twitter clone in an hour. And you had a YouTube video of someone building a Twitter or an Instagram clone in 1 hour. And so anyone could build a Twitter and Instagram, but the value is not in the code. The value is in the community and the users and the network effect. And same with AI, the value is not necessarily in the tool, especially with vibe coding, that's going to get better and better. It's in other things. And what I think it is could be the proprietary data and evals that actually makes the model, the AI models work. But it's also in the UX UI, customer user interface, UX UI, of how do you use your product? Why is Cursor and Windsurf, why are they winning when there's 10,000 other that are trying to replicate it because they have the best and most user-friendly interface? And then I think another thing that's really linked to the Lobster Capital philosophy is customer acquisition. If two companies have the same product, but one of them has a much better customer acquisition system, hopefully it's an automated system that just brings new customers day in and day out, they're going to win. And this could be a lot of things, including SEO or content, affiliate program, or a reseller, whatever it is, if you have a system. And so that's why at Lobster, I focus on this a lot. I ask the founders, what's your acquisition funnel and how do you acquire customers while you're sleeping? And it could be the only differentiator between two companies. And obviously the one that has the system is going to win. So that's why I believe for every company should have content, should build a social media presence, etc., or a system. So those are all the things that I look at. And again, if the product becomes obsolete, but you know how to build a system, you have the customers, or you have a great UX UI, and you have a community or whatever, then you can always adapt and pivot and change your product to fit the new needs. But the part that you have built that the others haven't is not the tech part that's irrelevant. It's the rest, the system, the customer acquisition, etc.
Yeah, and some network effects are super important in startup building. Like NFX has the 16 network effects. One of them is personal, which you kind of touched on there. And this is like a classic thing that people are saying now in this kind of era of vibe coding, that product is not the moat, like distribution is the moat, personal brand is the moat. I'd just be interested to hear your take on that. Obviously, content and branding is like super important to what you do as a investor, but part of this is where there is seemingly this kind of obligation now, or almost a necessity for founders to build a personal brand or to be kind of doing audience building. And there are increasingly, like especially with the younger generation coming through, founders that are going through YC and documenting the process on YouTube. How important is that for them? And is that something that they should definitely be doing? Or is this actually almost a distraction for founders? Like, how do you think about that and evaluate that?
It could be a distraction for sure, but I was going to answer yes, it is. For me, it's super, super important. I actually find, including at YC, that it's still a minority. I think many more people should do that. Now, it depends on who's your target customer, right? If you're only going to sell to the government or to the army, maybe you don't need a TikTok account or YouTube channel. On the other hand, if you're a B2C and you need maybe a big TikTok presence. So it depends, and it could become a distraction, right? It depends. If you're able to actually make it into a real customer acquisition channel, then it's never a distraction. But overall, I believe it is super important. Obviously, I'm doing this as well here with Lobster, and I've done it before. I used to have, still own, even though I don't publish anymore, a big YouTube channel in French, where it got me started with investing with French startups, with French investors, etc. So I do believe in content very much. I heard someone compare content with coding. Basically, content and coding are two things that are permissionless. You could be anyone. You could be like a dude in Pakistan in a small house. No one knows you, literally. And it could be any country, it doesn't have to be Pakistan. And you can just either code something that's good or create a piece of content that's good, and both for free. You just need a computer or a phone, put it on YouTube, or if it's code, you could put it on the App Store or on the internet, and literally blow up. And so you don't need to ask permission from anyone. And everyone realized that with code 20 years ago, you can create a website and become an entrepreneur. But only now people are realizing you can do the same with content. You don't even have to code if you don't like to, or if you don't want to learn or whatever. You can just create content, and people have built huge businesses just from content. We can think of Mr. Beast, but then there's 10 million other examples similar to him. Yes, I strongly feel like every founder should build content. I advise almost all of my YC founders portfolio to document their journey, to publish on YouTube. I'll give you a very simple example. Almost everyone I know is sometimes recording their screen with Loom, or actually they should use Tela, Lobster Capital portfolio company. That's much better. But to answer a customer question or debug your thing, or be like, hey, this is a new feature that we just launched, and send it in a private email. You should just take those videos that you already have. Everyone has those videos already sitting into their Loom or Tela account, and just make them public, publish them on YouTube. And that's it. It's already a start. It's zero lift. You just had to download them and publish them, but it shows your tool. It shows your product. It shows its content. And of course, there's many ways to do much better than that, but this is zero heavy lifting, like lowest hanging fruit ever that you can do. And it's just putting yourself and content out there. Reminds me of Naval Ravikant. One of his tweet storms, a very famous one, was, what's asymmetric in life? What things that you can do that can get you much bigger returns than what you put in? And he says, move to a big city, get married, invest in startups. And then he says, tweet. But it could be tweet, it could be YouTube or LinkedIn or blogging, but it's literally put yourself out there, put content out there. And if your tweet is good, it could have millions and millions of views. And you can try a new tweet every day, or every minute for that matter, until you get it and you can learn. I'm very passionate about content, so I'll stop here, but I think you understand where I'm coming from. And I do find it extremely valuable. And there's countless examples of content being incredibly valuable for many different types of businesses, entrepreneurs.
Yeah, definitely like a huge asymmetric upside. Yeah, maybe even that's a good place to leave it, because this is then content in and of itself that can be multiplied across. Again, the other Navalism is like the three times of leverage, code, capital, and media. So yeah.
Exactly. Yeah, same thing. Media. All right. That's a great place to leave, Laurie. Thank you so much. Thanks to our listeners. If you're still here, please give us a subscription if that's not already done, either on your favorite podcast app with a 5-star rating, please, or on YouTube. I'll see you on the next episode. Until next time.